Advanced Principles Podcast, or app, was created to be an outlet for like-minded individuals to share in the broader conversations on leadership, retail market updates, and incredible personal success stories. On app, you will hear a collection of stories from the titans of the retail industry, as well as thought and practice leaders covering the spectrum of the economy. Please click the subscribe button and look for the newest episodes to be released.
And you just hit on exactly why I love investment banking.
And what the separation is from investment banking and investment bankers and what private equity.
Gina Cocking is the CEO of Colonnade Advisors, a leading investment bank focused on mergers and acquisitions in the business services and financial services industries. She represents the 2% of women who are CEOs at financial institutions and has 20 plus years of experience in investment banking and executive leadership.
All right. Wow. What an impressive background. You have so much experience and such a prominent figure now in our industry. I'm so excited for this conversation. Gina, welcome to App, and thank you for being a guest on our show today.
Thank you, Ryan, for having me.
Yeah, absolutely. So we'll kind of just dive right into it, if that's okay. Before we get into the current events, which we could spend hours talking about, give us a little bit of your background and kind of the path you walked to get where you are today.
Sure. So out of college, I started out in investment banking and was with a firm based in their Chicago office. I then spent a year with the private equity firm, Madison Dearborn Partners. You may know them because they own Aminta today. Went on after business school to join JP Morgan in investment banking, where I did mergers and acquisitions. And up until that point in my career, I was a generalist. So I worked in equity capital markets, doing IPOs for a while, and just general M&A, everything from metal bending companies to insurance companies.
Wow.
I then went on to join Colonnade. I was employee number 1 at Colonnade Advisors. The head of the technology group at JP Morgan formed Colonnade, and I joined him soon thereafter. My current partner, Jeff Guiley, joined us a year later. And so Jeff and I have known each other, since we were very, very, very young. So we're going on at this point. And while at Colonnade, we started out focused on the technology space, doing M&A and technology. And over time morphed into focusing on business services and financial services. I left Colonnade in 2003. It was a little tough to balance the travel involved with investment banking and having a young child at home. So I took what I call my mommy route. My mommy route was being a CFO of a couple of companies, and it just didn't involve as much travel. And so that was a great trade-off. So I was the CFO of an equipment finance company. We financed Class 8 trucks. So a lot of experience with 18-wheelers. Then I moved on to being the CFO of a private equity-backed company. And then I was the CFO of Discover Financial's bank. They had a direct-to-consumer bank, a $29 billion direct-to-consumer bank, a $5 billion personal loan business. And I oversaw all of finance for non-card operations. And this is for Discover credit cards.
Wow.
So really had some experience in banking, and then had the opportunity to come back to Colonnade back in 2014. And during the time since I left Colonnade and Colonnade started focusing on financial services and business services, that's where I had spent my career. So it worked out really well. And I jumped right into working in the automotive sector with automotive F&I companies.
Wow. Such a great experience. There's so much to unpack. You could probably spend a couple episodes just on your pre-Colonnade experience with everything. And certainly that is not an easy position. I've known some investment bankers, and I don't think people appreciate really the intensity that takes through all the due diligence, all the pitches, all the travel, jumping continents and everything else. So, exceptional but it's a great learning environment and a great way to cut your teeth, and you get to learn about so many different businesses. I'm always envious of people that have that background. How cool.
And you just hit on exactly why I love investment banking. I love being able to work with best in class leadership. It's like a mastermind every time we get to know a company. We see what works, how they built a company from nothing to being worth $500 million. And there's no other field I can think of where you have that kind of exposure and that kind of experience. And that's what gets me excited every day about doing investment banking. And I think anyone on my team would say the same thing. It's getting to work with these amazing people and seeing how they did it.
Yeah, so cool. So cool. And I'm sure you're plugging a lot of their story into your repertoire then, and just your leadership book and your knowledge base and everything else. It's just great leaders and mentors around you 24/7. What a great experience. So other than incredible foresight that you had this amazing crystal ball that the M&A space of automotive was going to take off like a rocket when you jump back in 2014. So aside from that, how did Colonnade really settle in? And I think it's not too bold of a statement to say the leading authority or the leading voice in the M&A space in automotive, and not just automotive retail, but automotive protection products, insurance, and everything else automotive related. How did that come to be?
It goes back to 2002, 2003. So Colonnade had the opportunity to work with Independent Bank out of Michigan. And Independent Bank owned a company called MEPCO. MEPCO had two lines of business. One, insurance premium finance. The other, vehicle service contract finance. We followed up on both of those. So we sold MEPCO. And during that process, got to know insurance premium finance. We are the leading investment bank in the United States in insurance premium finance. We've been involved in every transaction. Okay, I think there was one transaction we were involved with. Every but one in the past 2 decades.
Wow.
We've done 28 transactions in that space. Through our work with Ed and Paul Walder at MEPCO, we got to know the vehicle service contract space. So we started off on the finance side. We then went after we sold MEPCO. I'm sorry, we sold it to Independent Bank. After we sold MEPCO, we then worked with PayLink, which is another payment plan provider in the direct-to-consumer market. And eventually that took us into the overall auto F&I space, where we've had the opportunity to work with direct marketers, the administrators. We work with finance companies in the automotive sector. I've been doing that for a long time. Subprime lenders, near prime lenders. Interestingly, we closed a transaction last fall for open road lending. And open road lending is a direct-to-consumer marketer of auto loan refi. So they reach out to consumers digitally and via direct mail and say, we can help you save money. And the consumer says, great. They go to the website, start the application, finish the application, go through a full loan underwriting. And open road lending actually underwrites the loan per their partner bank's models. And they do all the paperwork and the titling, and then the loan is placed on their partner bank's model balance sheets. And what's interesting about that is loan holders generally are getting the wrong rate. Because if you go into a dealership, the dealer has a markup. And when there's a markup right there, the consumer's not getting the national rate, or they're going to their local credit union. That might not be what the national rate is. And then 6 months into an auto loan, the loan holder is a much lower credit risk on that vehicle. So you can refi that auto loan. And that's an area that we're going to see booming over the next couple of years, is auto loan refi. Banks are dialing into it more. We're seeing more direct-to-consumer marketers. Private equities come into that in a big way.
Very interesting.
We've been doing a lot in auto finance. It's also taken us into this whole space has taken us into data analytics, especially on the direct-to-consumer side. The direct-to-consumer side, marketing is all about data and data analytics. Who do you contact? What is the risk? What is that risk of that person? And we've now worked with a number of data analytics companies and marketing companies associated within the automotive space.
Wow, very cool. So from your time really in investment banking, right from school through JP Morgan Chase, and then your mommy job of the CFO of multiple companies, it sounds like such a relatable experience within the vertical that you've now settled into. And I don't want to minimize the exposure that you guys have, but kind of settled into. So how relatable were those experiences for you and what you're doing now day to day?
It's been great. So first of all, working as a CFO of an equipment finance company, I lived and died by my balance sheet. And it was a finance company. And I learned a lot about trucks. I learned a lot about financing repairs on an 18-wheeler and how to underwrite risk. I built the credit scoring model. So I ended up with a deep understanding of credit by doing that. Then when I became the CFO of a private equity-backed company, that was really fun. It was in a different industry. We were the largest healthcare laundry in the country. But I was the CFO of a highly levered company that had to go through some massive changes while I was there. I won't get into all that, but we changed cash flow. We accelerated cash flow. We were able to sell the company within 21 months, and the private equity firm made over 3 times their investment in just under 2 years. So when I'm working with clients now, I can say, I get it.
Mm-hmm.
I have been the CFO of a private equity-backed company. I know what they're looking for. I know what you're going through. I feel you. I know what it's like to lay awake at night and wonder, if we're going to make payroll. I was the CFO of the equipment finance company in the financial crisis. Remember, trucking is a leading indicator. So there were a lot of sleepless nights. So I've had experience of leading the finance operations during a very difficult time. So I think what it helps me with is bringing to our clients the experience and the understanding of what they're going through and understanding their perspective, which helps inform on, to me, what we need to provide them.
Yeah, absolutely.
And so it's really worked out well. And I think that's, one of the, I will always just treasure the fact that my partners brought me back into investment banking at Colonnade. Coming back into investment banking is not a story you hear often, especially not for women, but just anywhere. Like you leave investment banking, you're dead. You just don't go back because you've lost the relationships. And I always wanted to get back, and having that opportunity and then being in a position to bring those experiences really makes Colonnade unique. You don't have many investment banks where you have a team that has bulge bracket experience, but we also have operating experience. And I think our clients benefit from that.
There's no doubt they do. I mean, you can tell the story. You can kind of forecast what their lives are going to be like on both ends of the transaction, right? Because you've sold and you've been part of the other side. It has to be a very calming effect, if you will, with your knowledge and expertise and professionalism in helping people walk that, because these are not simple decisions people are making. These are big, multi-million, tens of millions, hundreds of millions of dollars of decisions. And sometimes, choosing to let go of the dream that they built for all different kinds of reasons. And you've been a part of that story in so many different ways. That just has to be invaluable to them, and probably why you're such a leading firm in the spaces that you participate in.
I would like to say that we have pattern recognition and we're never surprised by anything. But boy, I tell you, every transaction is different. There's always something new. Like every time we're like, okay, file that away. Next time that happens, we know what to do. But everything is new and different. But we do have the skill set to navigate it. And I think, like I said, that's one thing that differentiates us from some of our competitors in this space, where you have, and it's all guys who work for large investment banks that are floating through the group. They haven't been doing automotive for very long, maybe 5 years, 6 years. Their junior teams turning over like that. They don't have the institutional knowledge. And more importantly, they don't have anything but the transactional experience. And clients, especially entrepreneurs or family-owned businesses, need more than just the transactional experience.
Yep. Which a lot of our industry is family-owned entrepreneurs, bootstrapped companies early on in their career. A lot of them are born out of retail and have walked that same path. And I have definitely spent some time with some junior analysts that come with high weight degrees from very prominent schools. And I can't really spend more than 10 minutes with them because it's just, because they were in some lecture, some professor told them how life is. And it's like, but you haven't lived it. You haven't done this. And here you and your team have. So I think that adds to all the credibility, and it's just phenomenal. So one misconception that you can kind of clear up or maybe help to some of the novices that might be out there, the difference between investment banking and private equity. and certainly in the automotive space in the last 20 years, we've become familiar with those because they're a lot more involved than they used to be. But I still think that there's a big confusion in what the separation is from investment banking and investment bankers and what private equity.
Thank you for asking that question, because we get this question a lot or encounter this confusion. So in private equity, the private equity firms have a pool of capital that they can use to invest in a company. Their goal is to become the owner of a company. Now, they may call on companies to say, hey, are you for sale? Are you thinking about selling ever? And they'll negotiate and buy a company. The company's then part of their portfolio, which they'll eventually sell and hope to make 2-3 times their money. And so private equity firms, most private equity guys have gone through investment banking at some point in their career, and they're managing other people's money. So what's different about what they do? Like I said, they're managing other people's money. They're playing with somebody else's money, and then they just make money on the ups. Now, in investment banking, we are advisors on either the buy side or the sell side. And sometimes I've had people say, well, you're kind of like a real estate agent. We see business brokers are like a real estate agent. But we are there to work with the company if they're selling, to prepare them for sale and go through the process. So that includes coming in, getting to know the company so well that we can tell their story almost as well as they can, or actually for the first time, help them articulate their story, where they have been, where they are today, and where they're going. We then do that through the form of written documentation on a confidential information memorandum. We identify who the potential buyer universe is. We contact those buyers. We negotiate with buyers. We answer all the questions. Wow. We deal with thousands of documents in the data room, which, by the way, we look at them all. We negotiate the terms of the transaction. We work closely with the attorneys on all the transaction documentation. We'll provide our industry perspective and our business knowledge, but we're not attorneys. And we help get the deal to close. And one of the important things is we keep the deal on task. It's all about not letting people lose focus and kind of go off in the field and get their interest in something else, but keeping the deal going and getting it to close. So in investment banking, we're all about the transaction. We are paid a success fee upon the close of the transaction. And then that is it. Whereas a private equity firm is buying the company.
Mm-hmm. Yeah, very different. So I would imagine throughout your career, and especially as of late, probably last 5-6 years, you've probably had to put a couple deals back together near the close. A couple people get cold feet, they get distracted, their interest waiver, maybe they got another random phone call. What is some of that like?
Oh yeah, we have that happen for so many reasons. You kind of hit some, all kinds of wacky reasons. Just the seller changes their mind. Something happens in diligence where the seller's like, I don't like the buyer. Like, I'm done. I don't like the buyer. Like, I respect that. We're done. Okay, close up shop, start again. Or the buyer, finds that it's just not the fit they thought, or they uncover something in diligence that just isn't right for them. So what we do with the company is, if they want to, and usually they want to, we regroup and go back out to market and position the company to be sold again. And so it's a restart. We can do it pretty quickly, and we have to educate the market as to why the original transaction didn't go through. But we usually then end up with a successful outcome. I would say it's harder. And by the way, successful outcome always means transaction to me. It's harder to get a successful outcome if the company's operations are going like this.
Mm-hmm.
If we sold the company when it's doing this, and then we get in process and it goes like this, it goes down, that's when we'll have a failed transaction, because the company's not meeting their expectations. And we're like, we get it. There are a lot of good reasons why this may be happening. Sit back. Let's work on your company for a year, 2 years, and we'll try to go to market again.
Yeah, very interesting. Very interesting. So Since you've now been involved in the automotive space, and I would imagine over the last couple of years throughout the pandemic and the fluctuation of supply chain and not knowing where revenues were going to be, and then revenues exceeding everyone's expectations, you probably had some of those kind of rehashes getting closer to the finish line. But what are some of the main changes that you've seen in our industry, the automotive industry, and all the facets that you touch on and have experience in, that kind of have gotten us to where we are today?
Good question. So, the pandemic, everybody freaked out in March, April of 2020. We had a deal that was supposed to close at the end of March 2020.
Oh.
But you know what? Yeah, the buyer was a visionary buyer, and they're like, wait, we get it. Let's wait a month, 2 months. And then we restructured the deal with an earnout. The transaction closed, and the seller hit all their earnouts, and it was a fabulous transaction. So actually we had 2 transactions like that right in March, April. So that worked out. But everybody had this dip in earnings, right? And so I'm going to talk about the auto F&I side for a while, just the administrators of product and the agents of product. And then the second half of 2020, performance improved, and then into 21, everybody had a fantastic year in 2021 on the F&I side, which was not predictable considering the supply chain issues. Fewer cars were being sold. So how is it that there are more F&I products being sold? If you had asked me in March of 20, if that's how it would have played out with supply chain issues, I would have been like, no, the industry's going to be in trouble. Because and I've done the graphs, we've created all the charts at Colonnade. In the recession in 2008, 2009, new car sales went down, used car sales went down, the F&I industry went down. Didn't happen this time because the dealers are hyper-focused on making money when they can. And I think what happened was in 20, it kind of shook everybody to the core. And the dealerships came back and said, you know what, F&I is uber important to the long-term profitability of my dealership. And we are going to focus in, we're going to dial in, we're going to make sure our clients have the right products. So dealers are selling more product with every car, and that has benefited the administrators. Coupled with, this has come at a time after the previous 5 years where we've had this continual increase in product sales, and consumers have had great experiences with these products. They've had claims paid out on their vehicle service contracts, tires replaced with their tire and wheel contracts, and they're telling their family, they're telling their neighbors, it's really a good product. I think we have finally seen the maturity in the F&I industry that this is a peace of mind product, and it's not just a product that maybe a dealership's trying to push on to a consumer, but it's a valuable product. Why would you insure your house? Why would you get a warranty on your laptop, but not get coverage for your car, for a mechanical breakdown in your car? I think it's finally resonated with the American public and with car buyers. And dealerships have focused in on selling product, and as a result, 21 was a great year. 22 is a great year for these administrators. And the dealerships out there are pretty profitable, and it's not only because some dealerships are profit taking, and that's okay. That's what our economy is all about. But they're also getting better at selling product, and I think this will continue. I think we're in a new phase.
Yeah, that's great. And I may carve out a couple sentences that you said in there to use as an infomercial within our dealerships about the consumer finally buying in that this is a value-based protection product. It's not a sham. And I love it. I love it. I might just have that on repeat for my entire team here. That is just a fantastic little take out there.